All right, so I did not like the fact that the previous video's audio was fucked up. So we're gonna be doing a full, remake for the people who watched the video or didn't watch the video, of all the trades that I missed out on, and me essentially missing out on 30K basically for the week, because I just had bad execution, and yeah, it is what it is. I fumbled. It is what it is. But in this video, we're gonna be covering exactly the trades that I did take, but also trades and setups that I missed in depth, from a discretionary aspect, to give you insights into what I look for when looking for setups on gold. And we're going to be going very in depth now. Now, guys, I need you to watch this video because I'm exposing the sauce, okay? This is for free. I'm going to be using terms that I don't normally use and make videos on because, I just thought, I can't be exposing the sauce like that, but for this video, I will be exposing all of it now. So stay, sit, watch, and, you're going to learn a lot of stuff. Now, if some concepts don't make sense, if some terms don't make sense, well, obviously there's a reason, because you don't know those concepts. So, they're not going to make sense, right? So go ahead and comment down below on what videos you want me to make in relation to these concepts, and any questions you might have on these concepts in general. I'd be happy to answer them in the comments, as well as make videos on them. All right. So let's get into it, right? So basically, let's start, and this is going to be on gold. You guys know I only trade gold futures, and we're going to do a full in-depth analysis of, how I kind of walk through the market and kind of what I look for, right? So, essentially, always, you want to come down here, and again, this is the platform that I'm using. It's called NinjaTrader. You can go ahead and open an account, download it, and make your account, visualize all the data, whatnot, by getting the order flow stuff. But yeah, essentially, market opened up right here, January 11th, at around, obviously, 6 o'clock. That happens every single day, or every single week. And what I was basically looking for was, I was in long. So if you guys remember, I was in longs at this point down here. I essentially caught a 1 to 10 RR trade. Reason for this was because we had a divergence. If you want to go watch the previous week recap on covering the trades, then we had a divergence essentially, and then we had a couple other confluences that allowed us to take this trade. But it was about a 1 to 10. I then on TikTok live bottom ticked this swing move right here, simple retrace to demand level, low volume node, and we ended up rallying to about like a 1 to 7. But if you held this into Sunday, it's been about a 1 to 18. So genuinely crazy trades. Just one trade like this, you're set for the next couple months or whatever. But yeah, those two trades. And then coming into this week, right? Now, I always urge you guys, and I always tell you guys to be careful, because you do not want to blindly just sell or buy off open unless you're very, very confident on what's going to happen, right? I'm very bullish. I know the market is going to pump up, but I didn't think it was just going to pump up straight at open like this. So let me go back down to the 1 minute chart and tell you that usually what will happen is when price opens up like this, or it's at a high, like it's obviously going to pump up to all-time highs, because there's no absorption, there's no real limit selling going on during this area. So there's really no point in looking for shorts, right? Obviously we have our quarters levels, you can see down here as well at 45.25. This is where people were taking TP. If you guys don't know, quarters levels are going to be our $25 increment increases on gold that are algorithmic places of gamma hedging going on. This is just an approximation to do it. It's obviously more complex than that, but these areas are where people will put limit orders, take TP, as well as have other complex interactions in price. Okay, so what happens is that I'm expecting price to just gap down a little bit, right? Just dump a little bit to this level of demand right here, and then end up having that move up to go higher. Okay, but what ended up happening was that if you take a look, right? If you take a look, we didn't really have, the moment we gapped up, we didn't really have an overboughtness on the RSI. Now, if you go to the 5 minute, the RSI is called the Relative Strength Index. We were kind of getting into oversold territory, but if we go down to the 3 and 1, like it wasn't looking like we were, you know what I mean? It wasn't looking like we were just gonna, it was kind of balanced at that point, especially when we got around here. We balanced in around here, and there's really no reason for us to just keep, just dumping now, right? Especially if we don't see any absorption, any limit selling going on. Essentially, this is where we pull up the order flow, and this is where you'll see what I'm talking about, right? So basically, if I pull this up here, let me see if we can go back all the way to the start of the weekly open, all the way down. Oh, is it going to be there? Yeah, okay. All the way, we got to scroll all the way back down here. So be patient with me. Okay, great. So what we're looking at right now, right here in this area, we're looking at this open right at this time and price right now. Okay. So one thing you gotta understand, guys, is you can't be scared when you have the confirmation trigger to just buy, okay, with a tight stop. Okay, you have to get used to doing this, and this is why I urge you guys to backtest, because you're not gonna develop the execution confidence by not backtesting. Okay, you have to learn how to take trades yourself and be confident taking trades yourself. But essentially, as you can see right here, we do have a little bit of absorption going on, 42 delta over here. But if we keep going up, you can see we start having a very, very, very big cluster of absorption. You can see we have a negative delta, positive green candle. If you look at the bid specifically, we're not seeing, obviously the 46 delta is down here. We're not seeing the, the mathematical imbalance, but this is technically where it is, right? Because there's 0 on the on the ask right here. But we keep waiting, and what we see is heavy true absorption, which is going to be on this candle right here. Okay, and when that happens, guys, it's just a wraps. Okay, you can see we have it at 44 45 40.4, 45 40.3, and 45 40.2, but this is a very good sign that price is going to pump now. Okay, and that happens specifically on the closure at 45 41.5. Okay, so essentially you could have caught one of the biggest RR trades. The reason I missed this was because I had to go take a piss, and it's literally lightning fast, guys. In 1 second, it'll just miss your entry, and it'll just pump. So essentially, this would have been the trade. You get in right around here, right, with that footprint confirmation, and then you would have ended up getting up to around a 11 RR at a max. Now, there are a couple other ways to take TP to to take partials to figure out where to sell off at. Obviously, you use your quarters levels for guidance. If you're taking it at this Q level right here, that's around a 5.46 RR. If you take it to this level right here, that's a 9.5 RR. So you can take maybe half off here, then full position off there. But there are other couple of methodologies. You can look for a reverse absorption confirmation to get out at. But yeah, if you don't have access to order flow, okay, what you can also do is you can go and look at a higher time frame candle. So in this case, if we go down to the 5 minute down over here, right, you can see every time you have an engulfing candle, there's literally no reason to not get in. And you could have actually gotten a bit earlier. You could have actually gotten a little bit earlier, right? But essentially, it was either you market order buy on this candle right here, or you market order buy on this candle right here like this, and you have the stop loss below the swing low like this. Or again, same thing here, just tighten up like this. Okay, now why can we keep our stop losses a bit more tight in this area? Okay, in this situation. Now, like I told you guys, if we gap up like this on Monday open on gold specifically, this is a thing, it will usually trend. Okay, but in this case, it's very unlikely that price is gonna just come up. In this case, if it's showing no real selling going on and it's kind of balanced at the RSI, specifically at this point down here, they're going to come down and just dump like this, and then end up, going higher. Now, obviously the market can do anything, right? It can do anything, but in terms of our logic and our rationale for our stop loss, okay? Even though I originally was waiting for price to come in and retest this area down here and then end up going higher, right? We can keep our stop loss a bit tighter because, okay, if we know that it gets stopped off right here, well, it's most likely going to go hit here and then go higher. So that's why we can tighten up our stop loss, because that's how we get good risk to reward ratios, okay? So in this case, if you were just entering off the 5 minute candle confirmation, and this is always what I recommend, guys, always, the 5 minute is super powerful, especially for 1-on-1 scalps and candle confirmations. Yeah, you would have literally been able to cash up to a 1 to 3.7 if you got it on here, and up to a 1 to 5 if you got it on here. Beautiful trade, okay? I ended up actually taking this trade on my personal for a really, really quick scalp, like $200, really actually a little bit smaller, really, really small scalp, was on this candle confirmation right here, like so. Okay, so once we have that doji, right, hammer candle engulfing, we enter in right around there, stop loss above the high, and then we went for a 1-to-1, really, really small scalp in this case. It ended up going for about a 2.67, but we just want to get a quick scalp in because this is a reversal trade, right? In very heavily trending days, you tend to not want to just get in on trying to catch the reversal, because it's usually for the most part not going to happen. Okay, but you can see though we have our quarters level, so we have our 45.75 that we tap perfectly. And again, these are not coincidences. These are, I made a video on this on NASDAQ, but there's a reason why this is happening. But you can see these ticks, right? Tick, tick, tick. Even though let's say you want to, you got to be careful doing this, but let's say you want to just enter in off this Q level right here, right? I've seen people, what they do is, in some of my students, they'll take like a 2 tick stop loss and they'll do something like this. And then, in this case, obviously it played out, but then they'll go for like a 1 to 20 RR and they'll get something crazy like this. But that's the whole principle of being able to like truly get a quarters level top and bottom tick or whatever the heck, right? I digress. So taking a step back, okay? Now, I told you guys, TradingView is a good platform, but it's not an order flow platform, right? So essentially, we don't have the tick by tick order flow data like NinjaTrader or like ACAS or Sierra Charts or what other order flow platforms you use, Motive Wave, whatever, because it's not an order flow platform. However, it's good at approximating the data, so it's like almost similar to order flow, but like not really. But I wouldn't use the delta on TradingView. It's just not something I would use. And again, I've never tested it, but where am I going with this? Okay, so you guys know from the last video, you have to set up your VWAP at the start of every single week. Now, VWAP stands for volume weighted average price. Okay, it is a moving average that has volume behind that takes into account the volume to figure out where price is going to react from and what's the most optimal, it's called the settlement price essentially, price in a certain range or a certain area. Okay, institutions and algorithms, they are literally built off VWAP, and they actually use it as a methodology to load orders, unload orders, as well as manage risk, right? Load their long-term orders and whatnot, etc. Okay, so what you want to do is you want to take this tool out, right? You click projection and you go down here to anchored VWAP, and all you do is you come down here, and actually before we do that, I'm gonna zoom in a little bit more. You come to your Sunday open, your Monday open, you come in here, you press anchored VWAP, and then all you do is you click it on the first candle. Okay, right there. What this is doing is it's anchoring your VWAP to the start of the week. Okay, this is called an anchored VWAP. All right, so this is where our VWAP is anchored. But if it's anchored at the start of the week, this is going to be your weekly VWAP. And you can see, and I don't know why this is doing this, probably because I clicked it like that, but you can see that this right here is going to show you where your VWAP is now from a generalized sense. Now, I'm going to zoom in a little bit more. Here. I know it's a bit cheeks right here. Yeah, this is actually on the 5-minute as well. Let's go down to the 1 minute. All right, let's go and take a peep at the 1 minute, okay? So you can see at this point in time, it looks like the VWAP is at like 5477.9 in this case, and you can see if we compare it to the first tap right here, it's about accurate actually in this case. It's a little bit accurate, but not fully. Right, still by a couple of ticks and whatnot, but I would always use the VWAP on your order flow platform. But it's a great, basically 1-to-1, so you can still use it and apply it. But essentially, VWAP is people will take scalps off VWAP. Okay, this is like a known thing. So if you want to use VWAP as a scalp and create a high probability discretionary trade, I would say look for 2 confluences that you can use as a minimum to take the trade. So what do I mean by confluences? When we're looking to take a discretionary trade, again, I just keep repeating, okay? We need to have a cluster of confluences that align up in a certain price level, okay? I want you to pause the video right now, and based on what I've told you, tell me the 2 confluences that you would use to take buys off this area. I'm going to tell them to you right now in literally 5 seconds. All right, if you pause the video and you thought of the 2 confluences in your head, actually also, if you were with me up until this point, so I know you're watching the video, comment the 2 confluences down below in the chat, so I know you're a real one and I know you're actually learning and paying attention. Because listen, guys, I'm not gonna do this shit if you guys aren't gonna actually fucking put the work in and actually watch the video in full. I'm not gonna do this for y'all. Okay, so go ahead, like that button and drop your 2 confluences down below, because I'm going in depth for all you motherfuckers, bro. All right, man. So you can see right here, the 2 confluences are gonna be your quarters level and your VWAP. Okay, those are your 2 analysis confluences. All right. Take that L. Nah. But in terms of our execution confidence, we then want to look for a reason to enter the trade, because remember, there's market orders and there's limit orders. Okay. how are we going to enter the trade? If we have VWAP, prices coming in real time, right? Let's simulate this as if we were taking a trade in real time, because all this is hindsight bias, right? Let's say we're taking the trade in real time and we're starting in here. I'm not going to do it, but just imagine you're taking the trade in real time, candle by candle. This is what I do every single time, okay? How would you have analyzed this in real time, okay? Well, number one, you see, oh, we have VWAP here and we have our quarters level here. So what's most likely going to happen? Are we going to take the trade off the VWAP or our quarters level? And where the fuck is this, okay? Or are we going to take it at like an average point, maybe at the midpoint? Now, if you use a limit order, okay, you put it right at the quarters level and you have a stop loss. Let's say you're covering that low. Maybe you want to go a little bit tighter for 6RR because it shouldn't go past this low, right? Great. You had up to a 1 to 3 RR trade right off rip like this. Now, obviously, if you held this, then it would have been up until, what is this, 10 RR. Crazy shit on gold, okay? But what's the con of taking limit order, okay? If you're wrong, you're going to get wrong quick. And if you're married to that bias and you keep trying to put a limit order and it just keeps going down and down and down, you're going to get cooked, okay? Let's say price did this. Let's say price, you take the limit order and then price did, it could have done, it did this, okay? If you have a limit order here, maybe you have a limit order, maybe, right below this low as well, maybe some imbalance here, you're just going to get cooked, right? So how do we prevent this? We prevent this by waiting for a candle confirmation, okay? By waiting for a candle confirmation, which is again a doji confirmation with engulfing volume behind it, you are making sure you are actually waiting for the setup to naturally play out, and then you're getting in line with the switching, quote-unquote, visual order flow, okay? Now, I'm going to obviously show you on the footprint chart what this looks like as well to kind of give you an idea, what's going on, okay? Now, you're not always going to have limit buying and limit selling going on, okay? And you have to understand how this is mathematically, or not mathematically, but why this is happening, okay? Because understand how someone takes profit as well as takes stop loss as well as enters in a position. Okay, let's say you're in a buy position. When you're in a buy position, your stop loss on futures is called what? It's a sell stop, okay? If you are taking profit in a buy position, you have a sell limit. So what does this mean? How do we differentiate when someone is taking profit versus actually putting sell limits or buy limits at a certain area? And the answer is context and narrative, okay? We know that this is a pretty important level, okay? But just because you see an important level does not mean you're going to see absorption going on, because what's the reason why price is actually moving from here? And it's crazy once you actually understand the reason why price is moving from here is because people are taking profit. There are people who are selling off their positions from here to down here, and also selling off their positions all the way from this swing leg to down here. That's why it's moving off this level specifically and hitting this level. And you're going to see, right? If I zoom in, let me zoom in a little bit more. You can see right here. If I zoom in into the footprint charts all the way down here, like this, oh shit, we don't really have major absorption with major delta. You can see a little bit down here at these little candles, but not really major absorption with major delta, okay? But what starts happening? 25, 8, 8, 23. Okay, we start to see some accumulation over here. But for the people who don't have access to order flow, what ends up naturally happening is once we hit this level at 809, which is 809 when this closes right here, there is market orders coming in because people are taking TP, but naturally this is going to form as a doji, right? And look what happens. If you entered a market order right here, buys with this, hoping that people are taking TP, look at that. You could have gotten at least a 1-to-1 scalp right here. Barely missed the 1-to-2, but if you kept holding, it did end up hitting, obviously. Let's say, you didn't like this entry, waited again for another retouch, and then, you wanted to wait and get in one more time. Boom, you would have gotten right there, another 1-to-1. Okay? So taking 1-to-1s, guys, and I had a guy who was on my YouTube, I think, or on my TikTok live. He was like, bro, I take 1-to-1s. I need to know if other people take 1-to-1s because people like to shit on 1-to-1s. And I'm telling you guys, 1-to-1s are a fucking gold mine if you know what you're doing. Okay? Like I'm teaching you. So remember, guys, you want to be looking for an engulfing candle. Okay? An engulfing candle, something like this, or like this, or like a hammer candle, if you're really confident at the bottom. And go for a 1-to-1, 1-to-2 at max. Okay, but yeah, that was the whole analysis on this. I did not take this because I was okay with the 101 scalp, and then I was okay just waiting because I have other actual models, other statistical models that I personally use that obviously I'm not going to disclose on here. I'm just trying to show you from a discretionary sense how this is working. Okay, but after that happens, all right, there's really no other trades in my opinion because even if you're waiting for like another VWAP tap or whatever, there's really no other key levels, no other confluences in this area. So why there's no trade to take, right? If you come over here now. This is a really good trade you could have taken actually by market close. So another concept is called RSI divergence, okay? And essentially in an RSI divergence, what's happening is that you're waiting for price. You probably have heard of, smart money traps or whatever, but you're essentially waiting for price to make a higher high while your RSI makes a lower high, okay? What this means is that the price data and the indicator data are diverging, and this indicates a hidden information of a reversal potentially happening. Okay, so you can see right here on the 1 minute, if I make this higher high right here like this, you can see, oh, we have a higher high, but at the same time, what happens here, we make a lower high. And when this happens, guys, this is literally a bread and butter setup. Okay, now you can combine this also with order flow and see, hey, is there real selling going on? Is there real buying going on? Whatever, right? Let's pull up the order flow now and see at this level. Now, it can still dump, but you can just add it as a confluence to make sure and see what's actually going on. Okay, 37, 68. Okay, this averages out 27, 33, 56. Yeah, so you can see right here with that 154 delta as well. Yep, this is a perfect trade. So once that happens, all you do is you wait for that 1 minute candle confirmation, which happens right here. Stop loss above the high. Let's say you can go for like a 1 to 5. And then you let this bitch rip to a key level that makes sense, okay? What are the two key levels that we have in this area for taking profit? We have this swing low, we have this quarters level, and we also have our VWAP band right here. Now, if you guys are trading prop firms, you know that you have to close your position at 4:10 p.m. EST on Top Step. I'm going to repeat that again, 4:10 p.m. EST on Top Step, okay? So logically, right, where do you want to take TP? Because we're trying to take a trade of where we're still making money, but we still are not going to be holding the bag too long or being in our trade and making sure we're closing before market close. The only level is going to be here, which is VWAP. So you could have gotten about a 1 to 4 on this trade. All right, just taking it straight to VWAP. Right there's your TP, and look what happens. Boom, TP hit. Okay, so great stuff. This is mentorship level. I said fuck it in this video because y'all deserve it. I'm in a good mood. We had some good fucking sushi. I was like, hey man, I'm gonna give y'all some mentorship level fucking sauce, okay? And just make sure y'all fucking like the video, sub to me, man. That's all I ask you for, okay? But yeah, that's really how this happened, okay? Or what you would have been taking, and then coming into Tuesday now. Really no trades. Same principle. You can wait for a retest of your VWAP and then wait for some candle confirmations. You could have taken a scalp off here. You could have taken a scalp off here. I mean, I'm good at seeing this, guys, so I'm just used to it. You can take a scalp off here as well. It was a great 1-to-1 right there. And then even right here again, right? And once you break above VWAP, you could have maybe gotten a scalp right here on this candle confirmation right there, and then rid that up for like a 1 to 3, 1 to 2. But lots of great scalp opportunities, guys, entering in off these 1 minute confirmations on gold, and then yeah. But you can see right here, you will have algorithmic ticks off your VWAP sometimes as well. So right around there, you have that tick, and then we end up opening in on Monday, on Wednesday. We just rally up. We come in, we retest that quarters level to a tick again, and you just see how crazy this shit is. And then we take this quarters level right here again, right to the tick. We dump down, we take it again. Like, this shit is fucking crazy, guys. It's cracked. And then yeah, and that's basically it for those two trades. Now, I was in this trade actually, and the reason why I say I fumbled because this was gonna be such a fucking banger trade, but I fumbled because just markets want to be weird. Okay. In my experience, you will see a tap like this, but you're not gonna see like 2 more fucking taps like this most of the time. Like, you're usually never going to see this. Like, I've never usually see this, especially when it's like just 1 or 2 ticks of tap like that. Okay. This makes more sense, but in general, like, you will never see like consecutive, like 1, 2, like just 1 tick taps like that and big swing moves coming from that point. Okay. But in this case, there was a lot of real limit selling going on here, a lot of absorption on this whole leg. And basically what I did was I sold straight at market open on this tick up right here because I could see, hey, we were seeing some selling coming in, but it's market close. So for prop firms, I can't take the trade. Okay. So I was like, okay, you know what? I'm going to wait for market to close, and it was just a beautiful trade. Like you get good entries like this, but like it was just it wicked up above this high, like just beautiful. And yeah, I had a tight stop like this. Okay, so this was the trade. Okay, and I'm not even shitting you guys. It literally I was targeting all the way down down here, which is a Monday low, because the reason was now we're gonna get into more order flow stuff, but the volume profile. Now, what is a volume profile? What a volume profile, I'm going to show you one more time, but what a volume profile does, guys, is that it will, and I'm going to go to the 5-minute because it's just better to see, and that's why I was on it before, but it will show you, right, the volume that is transacted at every given price level, okay? And as price keeps putting out, it keeps putting in how much volume there was at every given price level. As you can see, the y-axis is going to be our price, and our x-axis, or our impulse, it's like a histogram basically, it really is just a histogram, is going to be our volume. Okay, how many orders, net orders, were transacted at that level. Okay, now there's two things: high volume nodes and low volume nodes. High volume nodes are areas of where you can see very high volume, right? You can see a lot of volume being transacted. Low volume nodes are areas of where there is no volume transacted. So you can see these gap ups, there's no volume transacted here. It's thin here, it's thin here, very low volume here, very low volume here. Now, it doesn't look like this, but in time, during this point in time, when I'm telling you I'm taking that trade right here, there was no volume transacted. Okay, now why is this important? Why are low volume nodes so important? The reason is because there's a concept called auction market theory. Okay, auction market theory states that price will move dynamically based off an imbalance of buyers and sellers reaching a certain agreed upon price. All right, now again, think about this logically. Okay, if you were in a market, okay, people are buying something, you agree upon a fair price. Okay. These low volume nodes are essentially arbitrage opportunities of where price will draw towards, because the theory is that price will go from areas of balance to imbalance and then find a new balance and then keep repeating this process. And it makes total logical sense. And if you actually trade this, you'll realize that it does happen like this. Okay? So at this point in time, we had essentially low opposing volume transacted here, right? And from an order flow perspective, essentially it gets more complex. But if there's a lot of delta in one area, you basically want to sell towards that delta because it's causing a balancing effect. It's a little bit more out of the scope, but we're not going to get into that. But all you got to know is there was essentially no volume transacted here, and this was like especially at this area right here, okay? In this little pocket of price right here. Okay, so that area is going to be at a target of where people want to sell towards or people want to buy at, because people are going to find new areas of balance at areas of imbalance. That's how it works. Okay, so I'm taking this TP minimum all the way to like down here. There was a volume void, and a volume void is specifically a volume void is when there's zero volume transacted at a given price. And it hit perfectly to the tick, but it just took an extra day to fucking play out. So I was in this trade for literally the whole fucking day at break even, mind you, and I ended up closing the trade for around like 3 RR down around here, because I had to. I couldn't. Price came in at 310 right here. I had to close for fucking 3 RR or whatever the fuck, right? And I was just devastated, bro. I was like, there's no shot, bro, that I'm closing this shit for 3 RR, right? Even though when I was in such a good entry and it went to like 10 RR intraday, right? And that's exactly what happened, right? We can see we have taps off VWAP. You could have maybe gotten a scalp off here, closure below there, and a lot of scalping opportunities on VWAP, right, guys? But yeah, that was that trade. That was the whole rationale. And as you can see, we open up on Thursday, and we just keep consolidating. We just keep consolidating, and then we just dump. We just aggressively dump. But at this point, I don't see any trades because now my whole theory is shifted, because even though we were in this trade, right, why are we coming up to tap this quarter level multiple times? You can see we have 1 tap, 2, 3, 4, 5, and essentially in my experience, I will tell you this: you will never see like this happen. Very rarely will you see like something like this happen. Okay, especially when you don't see any real absorption going on, real limit selling going on. So my thing is this thing: okay, if we open up here again, while we already opened up here, and dumped, well, most likely we're gonna just, this is completely invalid now. The sellers have already closed all their buying at this level of VWAP, and we're gonna retrace to go higher, maybe take out this high, and then end up selling afterwards. Okay. And as you can see, we just consolidated, but that didn't happen. We come in again, tap this VWAP perfectly to the tick, miss our Asian high, and then just aggressively dump. Okay, but then we rebalance immediately right after that. But where do we aggressively dump to? We aggressively dump to our area of low volume. And you can see right here, the end of the histogram. This area originally was a low volume node that got filled and now is decently has volume behind it, right? So now this area of imbalance is now balanced. Okay, so realistically now, where is our next areas of imbalance? Our next areas of imbalance are going to be, you could say right here, right down here, or above here, which is going to be above this high right here, which is going to be another all-time high. Okay, now based off what's happened, okay, based off the RSI, higher time frame RSI, excuse me, oh my god, I feel like I've just been talking, holy fuck, I've been talking fast, bro, Jesus Christ. Based on the RSI, okay, not being overbought on the higher time frame, I do think we can potentially make one more high and then have an official sell-off for the quarter, or for the month, of where we make the monthly high on January, and then we end up dumping for January in the next couple months. And the reason is because, like I said, this is just way too aggressive. But yeah, I mean, it just logically makes sense of what I've explained to you. So I'm essentially hoping to play a retrace play, maybe retest around this area of demand right here again, in line maybe like with somewhere like here as well, because this is like another area of demand. And you can see we already hit that actually, but I want to see maybe just a little poke through again, and then taking it all the way back up to this high right here, which is going to be at 46.50, right? And then once we, maybe push up a little bit higher, maybe 40.70, I can't even fucking speak, 4,700, maybe, who knows? We'll, then accordingly, make our decision then. But I will say, we can potentially jump to 40.70 and then have a sell off, but something like this or a type of VWAP like this will be what I'm looking for to all-time highs again. Okay, now obviously that can change. I have seen this price action kind of before, and something like this, it'll have like a deep retrace, hit off VWAP again, and then just dump one more time, but then it'll have one big push up at some point in the next like week or two or something like that. I don't know. But another confluence of why I'm so confident on this is because if we take a look at the monthly candle, okay, the monthly candle shows that, hey, right, we know based off, okay, what, PO3, what our power of, I don't like to even fucking call it that, based off like how a candlestick works, we know that a candle makes a opening price, okay, in a bullish scenario, a bottom price, a high, and then closes above that opening price, which is why it's even a bullish candle in the first place, okay? So you can see this differential is positive, so that's why it's a bullish candle. Now, since most candles have characteristic top and bottom wicks, usually the first move is going to be the formation of the top or the bottom wick. That's the whole theory on this. Now, obviously, it's not to say that candles cannot be engulfing, but in terms of the month, in terms of a higher, and the whole idea on this, right? This can apply to every single time frame. So in the higher time frame, we opened up here, we made a very slight bottom wick, not really characteristic, but then we pumped up. So if we pump up, we don't really have a characteristic bottom wick that is the average distance of normal bottom wick formations, we can safely assume that this being made, this impulsive move, is most likely going to be the top wick formation. Now we have it's the 17th, we have like maybe 2 weeks of price action left, 10, 11 days or whatever. So what do we need to see now to potentially confirm if our candle will end up bearish? Okay, because we're still in this formation move. We would need the higher time frame, and actually, that's the indicator. We would need the higher time frame. And let me go to the 4 hour just to express this a little bit more. Okay, this is the candle, right? This is the candle so far on the monthly. We would need, okay, our higher time frame to start shifting bearish. We would need to see some type of strong closure down like this or like this, to then see price end up doing this, okay, for our candle to be bearish. So until we see this, or some aggressive candle confirmation, maybe some heavy selling in this area, we cannot take shorts yet, okay? But then when we take those shorts, it's going to be a fucking banger, because we know we can take those shorts based off our volume imbalances, off our auction market theory, at least all the way to this swing low down here, which is 42.83, okay? So we got to be patient, but this is, playing out to be really, really high probability, okay? But yeah, that is pretty much the week that we recapped in depth. This is a pretty long recap, but I really enjoy teaching you guys. You can tell I have a lot of passion for y'all. And if this made sense, if you have any questions, please drop them below, guys. Like, I've honestly been fucking frustrated and just down, like, mentally, bro, because it's like I work so hard to bring this content out to y'all, man, and making TikTok content, trying to trade, and obviously do all this analysis in my head and do it consistently for myself and for my students. Always making sure that we're doing the one-on-ones, making sure they're good. It's a lot of work, guys. So please, like, support, shoot me a sub, and yeah, man, I really give y'all some sauce. So please incorporate some of these things that I've taught you guys, and expect our future recaps and our future analysis to kind of be like this. Okay, guys. But enjoy your weekend and stay safe. I just want to say I love y'all. All right.